rund um die Welt der digitalen Assets vermitteln. Heute mit einem Fokus auf Stablecoins. Sie erfahren also, warum Stablecoins aktuell so stark diskutiert werden, was hinter ihnen steckt und welche Chancen und Risiken sie für Investoren bieten. Dazu vielleicht ein erster organisatorischer Hinweis. Um den zeitlichen Rahmen von 30 Minuten strikt einhalten zu können, nehmen wir eure Fragen gerne im Chat oder auch per E-Mail entgegen, haben uns aber dazu entschieden, sie nicht live im Webinar zu beantworten, sondern uns dann anschließend nach dem Webinar gerne direkt in den Austausch mit euch zu gehen. Das ist der erste wichtige Hinweis. Dann, das kennt ihr, dieses Webinar dient ausschließlich der Wissensvermittlung, stellt keine Anlageberatung dar und ersetzt auch keine individuelle Beratung, die die persönliche Situation berücksichtigt. Das als Vorrede. Noch einmal herzlich willkommen, auch für diejenigen, die sich gerade zugeschaltet haben. Ich glaube, es erwarten uns spannende 28 Minuten. Und in diesem Sinne starten wir. Gerne ein paar Worte zu 21Nexus, da die meisten von euch 21Nexus wahrscheinlich noch nicht kennen. In aller gebotenen Kürze eine kurze Vorstellung. 21Nexus wurde mit dem Ziel gegründet, eine innovative, jedoch vertraute und vermittelbare Investmentstrategie für digitale Assets zu entwickeln. Und daraus ergeben sich zwei zentrale Schwerpunkte unserer Arbeit. Natürlich zum einen die Konzipierung von Investmentstrategien rund um digitale Assets und zum zweiten, und deshalb treffen wir uns heute hier, Education und Wissensvermittlung, um den Zugang zu dieser Assetklasse zu erleichtern. Gerne auch der Hinweis, dass Teile unserer Webseite vorgestern live gegangen sind und die Inhalte sich in den nächsten Wochen kontinuierlich weiterentwickeln werden. Für alle Interessierten lohnt sich daher auch ein regelmäßiger Blick auf www.21nexus.com. Was erwartet euch heute? Stablecoins haben sich vom Nischenprodukt zu einem global relevanten Finanzinstrument entwickelt. Dazu einfach einmal drei Stichpunkte in den Raum geworfen. Stablecoins bewegen inzwischen mehr Geld als PayPal und rücken an Visa heran. Stablecoins halten mehr US-Staatsanleihen als Deutschland und repräsentieren inzwischen fast 10% der US-Geldmenge. Und Stablecoins besitzen ein attraktives Renditepotenzial, gemäß dem Motto, Stabilität trifft Rendite. Und so muss sich jeder, gerade der im Investmentbereich heute auch aktiv ist, nach diesen Entwicklungen die entscheidende Frage stellen, können Sie es sich leisten, sich nicht mit Stablecoins zu beschäftigen? Diese Frage ist nicht nur provokant, sie ist auch hochrelevant. Darum auch heute das Angebot dieses Webinars. Wir möchten aufklären, was wirklich hinter Stablecoins steckt, welche Chancen sie bieten und welche Risiken zu beachten sind. Um genau diese Fragen zu beleuchten, freue ich mich, heute Graham Cook begrüßen zu dürfen, CEO und Gründer von Cross Ledger Capital sowie Brava Labs und einer der führenden Experten, wenn es um das Thema Stablecoins geht. Und bevor ich dann das Wort an Graham übergebe, dann switchen wir auch übrigens zu Englisch, wie in der Einladung angekündigt. Hier noch ein kleines Schmankerl und ich möchte mich da auch gerne bei Graham und seiner Kollegin Fiona, die ebenfalls anwesend ist, herzlich bedanken. Graham Cook hat ein Buch über das Web 3 geschrieben. Das Cover ist auch abgebildet. Ich habe es hier auch auf meinem Schreibtisch. Also Thema ist Web 3 und dessen Auswirkungen auf Wirtschaft und Gesellschaft. Alle Teilnehmerinnen und Teilnehmer, die heute bis zum Ende des Webinars dabei bleiben, bekommen kostenlos ein Exemplar dieses Buches zugesendet. Also selbst wenn der Inhalt nicht das abliefert, was sich vielleicht der ein oder andere versprochen hat, wovon ich aber nicht ausgehe. Wir haben viel Zeit in die Vorbereitung gesteckt, aber alleine deshalb lohnt es sich gegebenenfalls bis zum Ende des Webinars dabei zu bleiben. Und ich verspreche, das Buch wird jeden erreichen. Okay. We will now switch to English for the conversation. Graham, I'm delighted to have you with us today. Would you please briefly introduce yourself before we dive into the topic?
Dankeschön, Boris, and guten Tag. Very excited to present today and talk to you. I'm Graham Cook, or GC Cook is my author name. I've been building technology for 20 years. I started my career formally at Google, one of the first European employees in 2005. I spent 5 years there. I actually spent a lot of time in Hamburg, working with the Google team in Hamburg. And then after 5 years there, I set up my own SaaS company in the AI e-commerce space, bringing big data and AI into retail to create personalized web experiences, and that was a company called Qubit. And then I got into digital assets in 2015 and just thought this technology is fascinating and has so much capability for changing the world of finance and finance and technology coming together. And then about year and a half ago, I set up Brava Labs to build a technology for managing stablecoin investing, stablecoin capital markets, and credit, all using blockchain technology. And very excited to be talking to you today about stablecoins.
Yeah, so happy to have you here. So a real expert. So let's dive into the topic. And just as a guideline for our participants and that they don't get lost, if anything is unclear, I prepared some key questions. Not every questions might be attached. It depends on our discussion. But let's start at the beginning. Graham, for everyone who is new to this topic, what exactly is a stablecoin and how does it differ from other cryptocurrencies like Bitcoin?
Sure. So stablecoin is a true digitization of money. So it's I think the way I look at it from the top down is it's if we look at all this sort of fintech innovation that's happened over the last 5, 10 years, yeah, N26 in Germany or Revolut or Wise. These were innovative fintech solutions that put a front end on top of a banking system that was built in the 1970s. But what a stablecoin is doing for the first time is creating a fiat currency representation, but built on a blockchain network. So it's effectively a $1 of a stablecoin is $1 in a real currency sense. So you don't have the fluctuating volatility of price discovery like you do with Bitcoin or Ethereum, but you have this sort of solid $1, €1, £1, but it's built on the blockchain and it follows all the principles of transferring money on the blockchain. And to make that work, it's backed by a reserve currency, a reserve asset, which is typically a treasury bond, a US treasury bond, and a little bit of cash. And that makes the stablecoin stay stable, is because at the end of the day, if you want to get the dollar back, you can go and redeem the dollar. They'll sell the treasury bond and you'll get a dollar back. And that's what keeps the stablecoin market stable. It's the fact that you can redeem the dollar for a real dollar in a bank account.
Okay, that's quite clear. But then why do stablecoins exist in the first place? So if I have a euro or a dollar in my purse, that's fine. What real world problems do they solve for users, investors, and businesses?
Yeah, so I think the real world problem initially emerged for stablecoins were so Bitcoin, if we trace Bitcoin back to its origins in 2009, the Bitcoin project emerged and it was very hard to understand what it was. It was very, very new concept. This idea of peer-to-peer money. There's no central, there's no central computer or company or government managing. It was a peer-to-peer money system. And so Bitcoin emerges in 2009 and starts to be used more in 2010, 2011. And then we had this sort of Bitcoin cycle up and down, up and down, up and down. And so what a lot of people started to think is, well, I want to buy Bitcoin, but then I want to trade Bitcoin. I don't want to hold the Bitcoin. I want to hold dollars again. And so there was a real need for people who were buying and selling Bitcoin to not only just hold Bitcoin up and down through the volatility, but to go back into dollars. And so the exchanges decided to create a stable coin. And that they said, well, why don't we just create a digital dollar that sits on the blockchain And then instead of having to sell Bitcoin and go back into banking system, you could sell a Bitcoin and stay in the crypto ecosystem and get $1. And that was the first real world use case, was it was for crypto traders. And so that was, I mean, it merged. It was BitMEX that did this, and Tether was the first stablecoin. That was the first, and they're still the largest stablecoin. And then what's happened over the years is that we've started to realize that stablecoins are effectively a really good form of money. And so what we're starting to see now is stablecoins being used for all sorts of reasons beyond crypto trading. And so I saw a really good definition recently on stablecoins, which is they have three properties. They have spend, send, and earn. Those are the sort of three properties. So I can spend the stable coins. Instead of spending a Bitcoin, I can spend a stable coin to buy something. I can send a stable coin as a payments mechanism, and I can earn yield on my stable coins. And so where we are today is we've seen that beyond the crypto trading use cases, we've seen that borrowing and lending stable coins and borrowing stable coins has been the second biggest use case, which we'll talk more about today. And then getting on to the use case that we've seen growing like crazy is around global trade settlement. So if you're a business and you're doing trade in 50 countries, you have supply chain, you have customers, you have suppliers, that the businesses are finding it's much cheaper, much more reliable to pay your supply chain in stable coins, instantly settle payments across the world, and even to programmatically write in a settlement structure that means that payments happen as goods and services are sent and received. And so what we're finding is that instead of you spending enormous amounts of time sending through many different banks, going through individual country banks, you could just, at a single programmable transaction, you can pay 50 different countries, thousands of suppliers. So that's one of the fastest growing use cases is a global supply chain. And then the next really rapidly growing use case is that will really sort of move this industry fast is in the consumer payment space. And so Stripe, which is one of the largest global payments systems, has now bought two stablecoin companies, and they're creating abilingside their network, they're creating a Stripe payment system. Visa and MasterCard have also announced a stablecoin payments rail as well. So now what we're going to start to see is you'll use your Apple Pay, you'll use your Visa, you'll use your MasterCard, you'll use Stripe, and you'll actually be paying in stablecoins because it's a more efficient payment rail than traditional banking.
Okay, understood. Then my question would be, and that's hard to understand for me, if the stable coins are so important, many might wonder why there are so many different stable coins out there. So we have Tether, we have Circle. Why is that, and what are the main reasons we see so many different providers and types of stable coins?
Yes, and I think we're going to see a lot more stable coins issued, actually. I think we're going to enter an era where the dollar for now is the dominant currency for stable coins. I think it's almost 98% of all stable coins issued are dollars. We will see a euro stablecoin will become the second largest I expect the next 2 years. But for now, the dollar is the number one stablecoin. And what you have essentially, there are there's sort of five main issuers of stablecoins. Currently, Tether is about 65% of the market. They're the original. Out of $250 billion of stablecoin, Tether's about 160 billion. And then Circle, which did an IPO a couple of weeks ago, very successful IPO in America, is the second largest, about $60 billion in stablecoin. And what we're going to see is with clarity through the Genius Act, which was a law passed through America, they've made it very clear on the rules for issuing a stablecoin. And in the EU, MiCA is also making it clear for how to issue a stablecoin. But a lot of businesses actually are eligible to issue their own stablecoin. And so we're gonna see a lot of experimentation with businesses issuing stablecoins, and we're gonna see whether that makes sense or not. So, for instance, Walmart, Amazon, Starbucks, Uber have all announced they're going to be issuing stablecoins. And so the reasons that Amazon or Walmart are issuing a stablecoin is that they want to make their payment costs go down. They're paying 2% to work with banks and Visa and MasterCard. So if they can use their own stablecoin, they can make 2% more margin, which on a 30% margin is significant. That's actually a significant margin increase. The question is, will the customer want to use those stablecoins? Will it actually improve the customer experience to use a Walmart or Amazon stablecoin? That's to be determined. But one of the statistics that I sort of look at is if Starbucks, which I mean, most of us are familiar with Starbucks, whether we like it or not, they currently have over $1.8 billion sitting on their Starbucks card balance sheet. So today, just Starbucks has $1.8 billion on their card. So you could see very quickly that instead of a gift card or a cash card, it becomes the Starbucks stablecoin. So if you look at that and you sort of said, okay, well, Starbucks 1.8 billion, they become the sixth largest stablecoin issuer if they converted their cash card into stablecoins. So I think we'll very quickly see how this interesting experiment is going to play out.
Oh, very interesting. Yeah, thanks for all those insights. Now, at the same time, it's important to acknowledge that stablecoins are not without critics. There are critical voices questioning their risks and their role within the financial system. There are studies from Bank of International Settlement, especially from the central banks. I would explore some of these concerns and narratives and hear your perspective. So I'll put the first critic just in. The argument that stablecoins are primarily used for criminal activities. How accurate is this, and what do people typically overlook in this discussion?
Yeah, I mean it's absolutely the case. I mean they are used for criminal illicit activity. But essentially so is normal currency as well. And actually, Chain Analysis did an interesting report. 0.3% of stablecoins are currently used for illicit activity today. That's according to Chain Analysis, one of the leader in blockchain crime intelligence. The UN estimates around 2 to 5% of fiat is used for illicit activity around the world. So it's 10 to 20 times higher in traditional finance and fiat for illicit activity. And it'll be interesting to see how that sort of number, that sort of gap closes as maybe more illicit activity happens in stablecoins. But there's one very important principle within stablecoins that makes it not so good for crime, is that all the transaction is publicly available on the blockchain. And without getting into too much technical detail on blockchain, which I would love to, but we don't have enough time, is the blockchain is a public database. Blockchains are essentially public databases that anybody can run, anybody can look at, anybody can transact on. They're public databases that sit on this peer-to-peer version of the internet. And so when I send Boris a stable coin, we are completely, our transaction is completely visible by anybody who wants to look at that. Now, they don't know it's Graham Cook sending to Boris. They don't know that we're actually, individually identifying ourselves, but our wallet addresses are completely visible and traceable. And our IP addresses and all of that information is recorded on the blockchain. So actually, if you're a criminal, cash is a lot easier, a lot less traceable than using a stable coin, which is completely traceable. So it's interesting. I actually think, in a way, I think stablecoins will maintain a lower percentage of illicit activity, but nonetheless, there will always be illicit activity.
Okay, with regards to the time, let's jump into just 1 second critics. Very interesting with regards to political situation. So some critics argue that stablecoins could undermine the effectiveness of economic sanctions and government control over money. Is this a real concern? And how do stablecoins fit into the broader financial system?
Yes, so I think stablecoins are definitely a hybrid form of money. It's not completely without government oversight. First of all, there is the stablecoin industry is looking forward and leaning into regulation. Even Tether, which is the original we're all very supportive of clarity and regulation and working with the government. Stablecoins, almost every single stablecoin is backed by government bonds. And so what we're seeing is an unprecedented purchasing of government bonds by stablecoins. It's actually, if stablecoins were a country, they'd be the seventh largest government bond buyer right now. So we're larger in terms of government bond buying than Australia, South Korea, and Saudi Arabia right now. And so their government still has significant influence via the bond markets. I think where we're testing the traditional finance system is going to be in if there was a mass redemption of stable coins into fiat, the bonds would need to be sold in a sort of rapid way. We could see that impact the yield curve on bonds. So I do think that one of the sort of outside risks is a yield curve risk in the short-term bond market. But that's not it's not completely unprecedented because the money market funds use the same sort of instruments, and there's over $1 trillion of money market funds. And I actually think stablecoin issuers would benefit from being regulated in the same way money market funds are being regulated, which have safeguards to prevent a sort of mass redemption, creating chaos in the bond market. So it'll be an interesting one to watch, and the precedence is the money market funds market.
Yeah, very interesting. Perhaps we can make a webinar on this topic alone.
Oh yeah,
The consequences for yield curve and so are very interesting. So let's jump into the interesting stuff with regard to investment and portfolio managers. So I understand stablecoins are not just a tool for payments and trading, they also represent an investment opportunity. So my first question, how can stablecoins actually generate returns for investors, considering, according to your explanation, that they are designed to be stable in price?
Yes. So stablecoins are, I mean, the two ways they earn yield. One is where the stablecoin issuer actually passes on the treasury bond yield. That's actually not the dominant use case because first of all, the issuers are using that yield to generate the profits for providing the stablecoin economy. And secondly, the Genius Act in America, because it was half written by the banking system, also have made that use case not eligible. So for now, most stablecoins won't pass directly the yield from the bond markets. So the way 98% of the yield is coming from today on stablecoins is lending to borrowers. So creating credit markets based on stablecoins. And really just in the same way as credit markets work in the traditional world, traditional finance, what you're doing is you've got a market of borrowers and lenders. And in that market of borrowers and lenders, it's different use cases for borrowing. And so the dominant use case is about $20 billion is borrowed in stablecoins today. And it's about 10% of just under about 10% of the market. And what those borrowers mainly are doing is they're actually borrowing against their Bitcoin or Ethereum portfolio, and they're using their digital assets as collateral, and then they're borrowing stablecoins against that collateral, just like a borrowing against your stock portfolio. And so there's a very large and established market that borrows against that, and those yields are about today 8 to 10%. Those borrowers are willing to pay about 8 to 10%. The markets are completely automated and completely reliable, and it's one of the best risk returns in the market right now. And then what we're seeing is emerging use cases where, for instance, on blockchain native hedge funds are running a delta neutral strategy or a market making strategy, and they're looking for capital to provide liquidity, and they're paying somewhere in the region of 12 to 15% for their strategies. And I think one of the largest emerging use cases that we'll see this year is that we're seeing the tokenization of actual public market securities. So you'll be able to buy Tesla or Apple as a token, and those are being issued by Robinhood in America or Kraken. Robinhood's actually focusing on Europe to launch their market, and you will be able to buy a digital version of Tesla or Apple or any of the public market stocks, and then you'll be able to borrow against those, and that will create an enormous market for stablecoin borrowing. And then on top of that, trade finance is the other largest use case we're seeing, where real world trade finance wants to borrow in stablecoins for all the reasons I talked about the global benefits. And they will then also, and that will pay about 15% yield. So there's just this, I think the fastest growing credit market will be stablecoin native, and it will best provide the best risk-weighted returns that we've seen in the history of private credit.
Okay, we have 3 minutes. Where are the risks? So very important. It's always about risk and return. Where do
Yeah.
you see the main risks?
I mean, with any credit markets, your risk is bad debt, and the bad debt comes from the counterparty risk. So with so many different, I mean, there's literally over 200 places that you can lend stablecoins, 200 markets you can lend stablecoins, over 1,000 different pools that you can lend stablecoins today. There's counterparty risk within all of that. So you need to understand the counterparty risk. Is it one borrower? Is it a million borrowers? And so being able to understand, that's something we spent at Brava. That's a big part of what we spend time on, is understanding counterparty risk on the blockchain. Much like BlackRock did this in the 80s on the bond market, we're doing it today on the blockchain. The other risk is stablecoin depeg. So the stablecoin, for some reason, the reserve assets aren't solid, and they're an exotic emerging stablecoin, and there's a depeg, and that's the second risk. So counterparty risk, just like in the real world, except it's on the blockchain. Stablecoin depegging is the second risk, and then there's also sort of smaller, more edge case counterparty risk in terms of the providers, the sort of middleware providers are using to go from the lender to the borrower. There is some risks there as well. But I'd say overall the risks are significantly lower for the liquidity profile of the returns that you can get from stablecoin lending.
Okay, thank you, Graham. Point in time. Thanks for these insights and for being with us today. We will make some more of these kinds of webinars. It's really to get interest from the audience. What is stablecoins? And I will now switch back to German for the closing of today's session. Also ich hoffe, das hat euch ein bisschen was gebracht und Interesse geweckt. Klar, Stablecoins sind kein risikofreies Thema, aber vor dem Hintergrund ihrer Relevanz und der wachsenden Nachfrage stellen sie auch aus Investmentsicht, glaube ich, sehr interessante Opportunitäten dar. Wenn ihr das Thema also weiter vertiefen möchtet oder überlegt, welche Rolle digitale Assets überhaupt in eurer Investmentstrategie spielen können, stehen wir Ihnen natürlich gerne zur Verfügung, sowohl auf Seiten Cross-Ledger, Brava Labs, aber natürlich auch ich. Als 21Nexus ist es unser Anspruch, Investoren zu unterstützen, in diesem komplexen Umfeld einen professionellen und strukturierten Zugang zu digitalen Assets eben als Teil einer strategischen Vermögensallokation zu finden. Ihr könnt euch jederzeit an uns per E-Mail wenden oder über LinkedIn mit uns vernetzen. Und ich hoffe, dass das Webinar also hilfreiche Impulse und Wissensaufbau setzen konnte. Es gibt eine Nachfolgemail, wo wir gegebenenfalls auch gerne Feedback einholen, denn wir möchten dieses Format gerne weiterentwickeln und auch andere Formate anbieten, die dann auch Ask Me Anything oder sowas sind und damit wirklich wertvoll machen für Wissensaufbau und Education im Bereich der digitalen Assets. Noch ein letzter Hinweis. Ich kontaktiere euch auch noch bezüglich der Buchversand. Pünktlich um 12 möchte ich mich dann herzlich bedanken, dass ihr heute dabei wart bei der ersten Session von 21Nexus Nuggets. Und mit dem Motto bis zum nächsten Treffen im Nexus zwischen Tradition und digitaler Zukunft wünsche ich euch einen schönen, erfolgreichen Tag und bis zum nächsten Mal.